Hello, class. I want to just take a few minutes to go over a couple review questions that I think might be helpful to you. These are some of the study guide questions that relate to each chapter in your text, but I'm going to take chapter 2 as an example and then go from there as to whether or not we would go to chapters 3, 4, 5, and 6. But what this particular exercise will do is get you to thinking about what you've read and place it in its priorities, understand what we're doing, why we're doing it, and how we are to solve various problems that we might face when we're recording transactions. So as a review, I'm going to ask a few questions. I'm going to leave a pause, and then I'm going to give you the right answer. If you got the right answer before I told you, good. If you didn't, that would be an indication that you might need to go back and read a certain area. This gives you an idea of certain areas of weakness and certain areas of strength, so you can be most efficient with your time. So let's start with something easy. We're going to do some fill in the blank, and then I'm going to scroll through and see what other types of questions and answers that I could provide that would be most useful to you, particularly due to all the questions that I've been asked. I think this might be a helpful tool, but let me know. Number 1, it says balance of account equals debits minus what? 2 seconds. Debits minus what? If you said credits, you are correct. Number 2, asset accounts have a normal blank balance. I'm going to give you 2 seconds. Debit balance. If you got debit balance, you are correct. Number 3, the dividend account has a normal blank balance. 2 seconds. Debit balance. Number 4, revenue accounts have a normal blank balance. 2 seconds. They have a normal credit balance. Revenue accounts have a normal credit balance. Number 5, expense accounts have a normal blank balance. 2 seconds. Expense accounts have a normal debit balance. If you got debit balance, you got the right answer. Number 6, liabilities and retained earnings accounts normally have a blank balance. 2 seconds. Liabilities and retained earnings have a normal credit balance. Number 7, the retained earnings accounts includes income statement accounts and the blank account. Now this one here is kind of vague in its presentation, so I'm going to give you 3 seconds to answer. If you said dividend account, you are correct. Now, as you go through that, think about it. And what we're trying with this particular exercise, we are trying to get you to remember the concepts relating to the different accounts that you have and what's normal to them. Now, I'm going to ask 2 more questions. I think I'm going to do these multiple choice. I think they're good. So I'm going to ask the question and you can look at the responses, and then I want you to think about it, and I'll give you the answer. Number 1 is determine which type of account is best described in each of the following definitions. Resources of a company is A. Stockholders' rights to assets of the company. Sales of services or products. Amounts owed by the company. Consuming assets or services in order to produce revenue. This type of example is all about understanding the concepts and the terminology. So A, what do you think? Resources of a company is going to be an asset. So number A, or letter A, is assets. Letter B, stockholders' rights to assets of the company. That's the equity. That's the equity. C, sales of services or products. That's revenue. And again, these are definitions of terms within your chapter 2 review. Number D, it says amount owed by the company. There's a key word in there. D is a liability. A liability is something that you owe. You owe money. You have an obligation. E, consuming assets or services in order to produce revenue. This one here is tricky, so think it through. Consuming assets or services in order to produce revenue. 2 seconds. If you selected expense, you are correct. Now, number 2, let's do the same thing here. It says determine which of the following account is an asset, liability, revenue, expense, or stockholders' equity. I'm going to read them out and then I will read the answers. Equipment, utilities incurred and paid, unearned revenue, fees earned, common stock. For A, we know equipment is an asset. It's a resources of the company. Utilities incurred and paid, that is the definition of an expense. That's a utilities expense. Unearned revenue, revenue that's not earned, that's a liability. You have an obligation to provide that service or product. Fees earned, that's revenue. And it's the same as sales of services or products. It is revenue. Common stock, that's going to be equity. So A is asset, B is expense, C is liability, D is revenue, and E is stockholders' equity. I'm going to do another one because I think these are really, really helpful. And some of these might be easy, but remember, these terms don't go away because we just review them. You're going to be going through these terms and reviewing these terms and actually having to apply the answers to these terms in various types of transactions that you're going to be recording over the next 8 weeks. So it's kind of important to go through this review, even if it might be a little bit easy for you. Number 3, which of the following accounts be an example of an asset, liability, revenue, expense, equity? So, salary payable, supplies expense, common stock, copyrights, fees earned. Now, if you look at the first one, that's a liability. Why would you know it's a liability? When it says payable, I know I'm going to owe somebody something, in this case, salaries. So A is a liability. Supplies expense, that's going to be an expense, and it's going to be a reduction in equity. Remember, expenses reduce equity. Common stock, that is stockholders' equity. Copyrights, copyright is an asset. It's a resource of the company. This is an intangible asset, as a matter of fact. It's not something that you can touch, but it's still an asset. It's still a resource that the organization can use. It's an asset. Fees earned. Now, remember, 2 words there that really just stick out. Fees is one thing, and earned is another. When you combine them together, it's not an expense. It's actually a revenue account. Let's do number 4. Would the following accounts be found in the balance sheet or the income statement? So for A, B, C, tell me if it's going to be a balance sheet account or shown on the income statement. Cash, interest revenue, long-term debt. 2 seconds. Okay. Cash you'll see on the balance sheet. Interest revenue gives it away. It's going to be on the income statement. Long-term debt. A long-term debt is a liability, which is going to be shown on the balance sheet. Let's do 5, 6, and 7. Let's go up a little bit. To 5, 6, 7, and 8. Which financial statements would include the following accounts? And again, it's very important because when you're preparing your statements, you need to know where these accounts belong when you're preparing your statements. Okay. Unearned revenue, gain on sale of investment, rent, expense. 2 seconds. Very good. A, unearned revenue is a liability. It's an obligation to provide some service or product to your customer. Gain on sale of investment. You sold your investment, which is an asset actually, because they're resources that belongs to you. But you sold it at a gain, meaning you sold it for more than it's worth. There's a difference in a change in the value of that asset. It went up because you have a gain. A gain on a sale of investment is other revenue or other income, and therefore was shown on the income statement. Rent expense. Rent expense already tells you because you see that expense gives it away. It's going to be shown on the income statement. Number 6, which financial statements would include the following accounts? Machinery, common stock, legal expense. Machinery is an asset shown on the balance sheet. Common stock is an equity account, and it's shown on the balance sheet. Legal expense already tells you that that expense is going to give it away every single time. It's going to be shown on the income statement. What is the effect of a debit and credit increase or decrease on the following account balances? This one I want you to think through before I answer. What's going to be debit or credit on the following accounts? A dividend has a normal debit balance. So a debit will increase the dividend. A credit will decrease a dividend. And note that the dividend is a contra, or it's actually a return of investment. So it's on the equity side, and it's actually monies that's returned to the owners, their share of a profit of that organization. So it's a reduction in equity. And to reduce equity, you have to debit. Accounts payable, that is an obligation. So it's going to show on your balance sheet as a credit balance, a normal credit balance. To reduce it, you will have to debit. So normal balance for accounts payable is credit. Equipment shown on the balance sheet, it is going to be shown as a resource of the organization to use, and it is an asset which will normally have a debit balance. A debit balance will increase it. A credit balance, if you're selling it or disposing of it, is going to be a credit. Would a debit or a credit increase? A common stock, a salary payable expense, an expense earned. Now, a debit would decrease stock. That happens when you sell it. A credit would increase stock. That happens when you purchase. Salaries expense. Generally, salaries expense is going to be debited. Very rarely would it be credited. Why? Because you're not going to be reducing your expense that you've already incurred unless you made a mistake. So a debit balance for the salaries expense. Fees earned, same thing. Generally speaking, it's going to have a credit balance because it goes up. Revenues are going to have a normal credit balance, and they will be going up with a credit. All right, I'm going to go down to a couple transactions because I want to be able to take a moment to go over how to record these transactions. So what we're going to do is I'm going to copy these transactions, and we're going to do some journal entries. Hopefully they'll let me copy. Okay, we're back. I'm going to work on this one little problem, and I'm hoping that you can do it with me. We are going to prepare an unadjusted trial balance based on the data that's given to us. So what I'm going to do is go through these, and I'm going to highlight them in certain order so that I can put them in order so that you can follow suit with me. I'm going to follow with this one first. Our cash account is $2,000. And looking through here, again, we're going to prepare the trial balance in order of assets, liabilities, equity, revenues, and expense. So I'm looking for any type of other asset here. I see a one here. And hopefully I won't forget any. And that's accounts receivable has a debit balance of $1,500. And I'm looking for more assets. Do I see any more assets? I don't think I do. So my next step is assets going to be liabilities. I'm going to find my liabilities. Here's one. I'm going to color this one different. I'm going to make this red. Here's a liability. Oh, I see one more asset. PP&E. That's interesting. I'm going to change this to yellow. I'm going to call it PP&E. Plant, property, and equipment. And although this is a long-term asset, we don't care for the trial balance. We just want to have all our assets together and all of our liabilities together and all of our expenses. We have another asset I just missed. Got to be careful. Supplies. And that asset has a $1,300 debit balance. So now I've got my liabilities next. I see one liability. I see another liability. And let's see if I see any other liabilities here. Long-term debt, I see a liability here. So let's put them in. And I'm trying to put them in order of liquidity or maturity. In this case, current liability is going to go first, and then long-term will go second. $1,200, oopsie. Get rid of that. And then we've got another liability, accounts payable. Again, an order of maturity. And that's going to be 1240. And then the next one is long-term debt. Hopefully I didn't miss any. If I did, I'll have to put it in later. 7,400. Now, we've got our assets, we got our liabilities. Next is going to be equity. And I'm going to look for equity here. And I see one. And I'm going to put equity as a green. See if I can find any other equity accounts. I don't see any other. So, stockholders equity. And that's going to be 2460. Now, we're done with that. Now we can do our revenues and our expenses. I see one revenue. I'm going to give revenue blue. Interest revenue, blue. And anything else? No other revenue accounts. So there are only two. Fees earned. Revenue account. And it's going to have an 8750 balance. And I see interest revenue. And it has a balance of 1,500, looks like. Now, all that's left to me are the expenses. And we're going to highlight those in green. No, I'm not going to use green. Green is already used. I'm going to use brown. That might work better. Brown and brown. So let's do them. And it doesn't really matter what order you put them in terms of supplies, expense, and the others. I'm just going to put them in order from top to bottom. Hopefully you guys can follow me on that. Rent expense. Again, debit balance of 1,200. Forget the fact that the zero is not there. It's 1,200. And then salary expense. That's going to be 1,200. Let's make sure I got everything right. Oh, I'm sorry. Rent expense is 3,550. All right. Now what I'm going to do is I'm going to do a sum and add all of my accounts. And I'm going to copy. This is the best time to find out if you made a mistake. The single best way to find out if you made a mistake. Not to say that every single thing that's correct because it balances. That's not true. But I tell you, the single biggest mistake students make is not balancing their trial balance unadjusted. And now we have created an unadjusted trial balance. I hope this makes sense to you and it's logical. If you have any questions, please reach out and I'll talk to you later.